options available for companies to generate funds in case you want to expand, in case you want to move to the next level. What is the option available? The traditional option is equity. You can ask either people in India or abroad to infuse money in equity. You can issue additional shares. You can have the shares. There is no restriction on the issue of shares. You can keep on increasing the number of authorized capital by applying to ROC. There is a small fee you have to pay to ROC. You pay the fee and then you can keep on increasing the share capital base. But the negative of increasing the huge capital base is your stake dilutes. You will have today, suppose two people have joined started the company, 50% share you will have, the other person will have 50%. And if you keep expanding and adding new people, and they put in, suppose your capital is 1 lakh, tomorrow somebody comes and says, I'll give you 10 lakh rupees, you need money, you allot me shares. If you allot 10 lakh shares to them, you become minority shareholder. You will hold only 9% share. He will hold 91% share out of 11 lakh shares. So you are giving your company to somebody else for the purpose of 10 lakhs coming in. Then you become normal employees. So you should be careful. What is that you want to issue as equity? What is that you want to have control over the company? If you have your company, when you say you want to have control, then your equity is one primarily in the company. Rest all that you are discussing is allied funds. Equity is the one that determines who is the owner of the company. So that you should ensure that you don't dilute beyond your requirement. If you say that I want to have 50% control of the company, you should have 50% at any time. If that guy is bringing 10 lakhs, you should bring in equal amount of 10 lakhs to say that both of them are equal, 50%. Otherwise, he will become higher stake and he will have a lot of say in the company. Any decisions, he will have the majority stake, he will have more than, in the Companies Act, more than a shareholder having more than 3/4 of the share capital can do anything in the company. Most of the activities. Minority shareholders have very limited activities. So, and the guy who has more than 51% share capital is the guy who has a say one leg above that other guy in the company setup. So you need to see when you form a company who wants to have the upper hand. 51% is the minimum limit. Beyond that you can have more. At least a person who wants to have upper hand should have 51% as your share capital. Another person should have 49%. So that in any decision making you have the final say. So that should be ensured. The other way of generating funds is compulsory fully convertible preference shares. Okay, preference shares are nothing but it's a form of a debt. They don't have right in the voting power of the company on any matters, but they will have a share of your right in your share of your profits. See, in the reserves that you generate, the profits that you generate, first can be distributed to the debtor, to the liability as interest. Then you can distribute it to preference shareholders have fixed dividends. You have a 10% preference share coupon, which means out of the profits you generate, first you have to pay 10% to the preference shareholders. Remaining only you can distribute to you as dividend, as equity shareholders. So, so here again, they cannot control the company, but at the same time they get dividend only when the company makes profit. So this is a form of investment in the company a guy makes, depending upon the potential of the company. So unlike a loan where you have to compulsorily pay the interest whether you make money or not, in a preference share, you have to pay him only when you have profits. Otherwise, the preference shares will get accumulated till the year you make profits and then you can distribute. No interest on interest is paid. So that is when you go for a preference share stake. It's like a quasi partner, doesn't have full control, but still shares profits when the company makes profits. Compulsorily fully convertible debentures. This is a debt. Like they take a loan from a bank. These are bonds issued by the company. Company can write a bond saying that you give me 1 lakh, I will pay you a fixed interest of 20%. And after a certain period, 5 years, 10 years, I will convert this bond into equity. You become a partner after 10 years. So typically what will happen, since you are giving him a stake after 10 years, which is a bigger booty, because by 10 years the company would have grown 10 times, assuming, or 100 times. The net worth of the company when he invests today may be 10, but when he is converted into equity shareholder after 10 years, net worth would have gone to 1,000. So you can get a loan at a much lower rate. Unlike a bank, if you go to a bank, he will charge you 15% interest. Here, you can convince the investor to say that, okay, you are partnering with me, I'll give you equity share after 10 years, but during the period of 10 years, I'll pay you a nominal interest of 5%. You are investing into me knowing that I'll grow from 10% today to 1,000% in 10 years time. So when you allocate equity shares after 10 years, and then if you, the worth of the equity shares at the time is the net worth of the company, which is very large. So keeping that in the mind, there are investors who are willing to invest as fully convertible debentures. Because today you may be needing money, but you may not want to pay so much interest also. So this is another way of getting investors into your company by giving him a low interest initially and giving him a stake after 10 years. Maybe you can add the stake now itself, the conversion ratio, how much you will convert, how much you will give him stake, 20%, 10%, 5%. So that is another way of funding at a low cost. The other one is overseas debt. So because overseas the debt is cheap anyway, you get interest as low as 4%, 5%. The RBI today controls ECBs at a LIBOR plus 3%. LIBOR is only 2.5. Effectively, the interest cost is only 5.5%. But it's a debt. There is no attachment to equity in that. There are restrictions in that. When you take ECB from abroad, that external commercial borrowing is called as. So when you take ECB from abroad, that ECB can be used only for capital purposes, not for your day-to-day running. You can't take ECB for paying salary. You can't take ECB for paying rent. You can't take ECB for paying your security, paying your car hire. You have to take ECB only for putting up a facility. You want to put up a building. You want to set up a R&D center. You want to put up your office, buy equipments, buy table, chair, everything. Capital infrastructure alone you can take ECB. That is what today the RBI regulates that. So that is one restriction out there, but you will still get a cost at a very, very cheap rate. So to give you an overview, equity, you have to be very careful to whom you share with it. Always, it's the easiest form to generate money, but it comes with a huge risk of you diluting a stake. So you should be careful there. The other options are either go for convertibly, compulsorily fully convertible preference shares. There again, you don't pay him, you pay him only when you earn profits. In a debenture scenario, you pay small interest and convert him after 10 years into equity so that you don't have a huge cost when you are borrowing. And the last one is, if you have to borrow only, borrow on ECB, and that can be done only for your expansion, not for your day-to-day expenditure purposes. Yeah, these are some compliances when you go for taking the loans or attracting FDI. So when a foreign guy comes and invests into your company as equity, various compliances are there. You have to file a FCGPR. There's a form called FCGPR with the RBI telling how much money came inside, who is the investor, what is his KYC, what is his address, what business he is in. Because we don't want some terrorist group coming and investing in it. So government wants to keep monitoring who is this foreign guy who is coming and investing here. So and then there are certain time limits of 30 days. Within 30 days of money coming in, you have to file procedural things. Okay, other regulatory frameworks. So far we saw the entity formation. We saw how the money has to come inside, what are the ways of funding, and then we saw about what kind of investments can be done, in which sectors it can be done. And what we will be seeing now is what are the other regulations which is important for a startup. When they should kickstart these regulations is what we see. Yeah. See, when you are starting a company, once you register the company, the first activity you should do is obtain a permanent account number, because Anywhere you go, after you get the certificate of incorporation from the ROC, open a bank account, get a premises, paying anything, your PAN is asked. So first take a PAN number, which takes about 15 days. Make an application, 15 days through the net, your PAN number will come. Then the next thing is, once you start your business, you will be engaging vendors. You will be engaging a security guard, you will be engaging auditors, you will be engaging a cab hire, you will be engaging contractors to clean your place. All these attract withholding of tax under the income tax law. You need when you are making payment to these vendors, you need to deduct a portion as tax and remit to the government. So when you are deducting, you are called the TAN number, tax deduction account number. So you need to take a TAN number also once you have these vendors. So because there is a compliance to deduct and remit to the government, this TAN number is also a requirement which you can apply parallelly after you get the PAN number. Then the service tax registration. So once you start rendering services, there is a service tax law which compels you to charge service tax. I'll come to the exemption incubators have. I've got a separate slide on that. I'll come to that. Generally, there is a service tax liability on services rendered because you will be rendering or you will be selling IPs, earning royalty income, which is subject to service tax. You will be doing implementation, customization at the vendor's premises. That may attract service tax. And today, the service tax is applicable on everything. And they are given a small list of 19 items on which service tax is not applicable. So every activity you do is subject to service tax. So you are supposed to take a service tax registration. I think it is 30 days, right, from the date of service?
Yes.
So within 30 days of you rendering the service, you are supposed to take a service tax registration and collect the service tax from the vendors. When you raise an invoice, $1,000, you have to raise a service tax of 12.36. So the vendor will pay $1,000 plus 12.36. The 12.36 you will have to remit to the government. When you remit, by the time you remit it, you should have a service tax registration through which you will remit. Otherwise, it will not go into your account. So even if you are remitted, it will not show that you are remitted. It will be in suspense account. Then there is a big litigation to see, find out that money and then match it to you. So better to take a service tax registration the minute you are liable for it.
Isn't there a turnover limitation for you can?
Yeah, so that's there separately. For incubators, there is a limit of 50 lakh rupees. So for a period of 3 years, from the date you signed an agreement with the incubator. So from that date onwards, for 3 years, you are given an exemption up to 50 lakhs. There is no service tax liability on incubators. But in any year, if you cross the 50 lakhs, from that year onwards, there is no service tax exemption.
But still we need that service tax registration.
You have to take service tax registration immediately for that also. The other one is the shops and establishment registration. So once you have set up your company, you will have a small office. That office needs to be registered with the shops and establishments regulator in your city. Every city has got a shops and establishment because they want to keep track of what kind of establishments are coming up, what kind of shops are coming up, what do they do. So you need to register that, and every 5 years it needs to be renewed so that they get your data updated. You may have registered in one place, then you may have moved on, and every time you move on, you need to update them of the new address also. And then they want to keep updated every 5 years as to what is that you are doing. So that is a very important requirement. Without that, you will not get your service tax registration or your other VAT registrations. That will be shops and establishment. The other one is the professional tax registration. See, when you engage employees and you are paying salary, every state, including the Kerala state, has got a rate of professional tax payment. So for an employee when you are paying, there is a professional, he is in the profession of rendering services. So there is a profession tax, a small amount. I think in the state of Kerala, we have the next slide. No? So for the state of Kerala, these are the slabs. If the salary income is between 12,000 to 1799, the half yearly payment is 120 rupees. The amount may be small, But the nuisance that these guys give if you don't pay is very large. It's better to pay this. And as for the slab, the professional tax rates also keeps increasing marginally. So this is half yearly payment. So you need to pay this.
This is half yearly income.
No, payment half yearly. The income is. Oh, this was the income is also half yearly, is it? Half yearly income. If you are,
1,000 half yearly.
which means 24,000 per annum. So if you are having a guy who's most of them will be in the topmost slab, so that will be 1,250. They're still Arctic, formed in 1950. So when the first slab was very important. So we have moved long time, but this is yet to move. So we have to pay 1,250 every half year, per year 2,500. Just per person. So you need to pay that. You need to take a registration with the professional tax authorities, and there is a return, half year return to be filed.
That is not exactly like, if you are in the beginning stage, still you have to pay.
Yes. If you have one employee also.
If we are not treating as an employer, but as a contractor.
Contractor you will not, but for that separate law is there. I'll come to that. Yeah. Next one is the provident fund. See, when you have employees, you are supposed to, there's a provident fund law which says that you need to contribute 12%, the employee needs to contribute 12%, and the both of you pay to the 24% pay to the provident fund authorities. That is basically a social security which is there everywhere in the world. But there is a restriction, limitation. It is applicable only when you have more than 20 employees.
More than 20 or 20?
20 or more.
20 or 20?
20, 19. Up to 19 is not applicable. Up to 19 is not applicable. From 20 onwards it's applicable. So once you touch 20 employees, not contractors.
Including directors, right?
Directors are employees.
Employees.
Directors are employees, technically. So once you touch 20, you have to comply with this. You have to take a registration, contribute PF. You are liable to pay PF. Other one is bonus. Again here, if you have more than
Minimum is 12%.
12% from employer, 12% from employee. Again, bonus is again here if you have more than 20 employees, only this regulation kicks in. You are supposed to pay a bonus as per the Payment of Bonus Act to all these employees that you have got. And there is a calculation mechanism that is mentioned that bonus act separately. Similarly, gratuity is when an employee leaves you after 5 years. Up to 5 years, there is no gratuity, compulsory payable. You can pay gratis if you are so generous, and then if you feel that this guy has done something great for you, you can pay him gratis always. But as per the law, gratuity is payable only after 5 years of service and if you have more than 10 employees. So here again, there's a calculation that it should be 15 days salary for every year of completed last drawn salary into last 5 years or how many other years he has been with you. There's a calculation mechanism for that also to calculate and pay. Of course, I don't think any of these will be applicable to you in the immediate future. But these are all there. Just park it somewhere in your background. So when you want to just put it back.
What about IE code? If the money is coming from
Okay, IE code is nothing but when you are importing goods from other countries.
Okay, so for service company, if you are giving service to a company abroad, there is no code taking IE.
IE code is not for that, that's a misconception.
IE
code for full form is.
And I've got an involved remittance for some $2,000 company. So
That is
bank
a-
guys ask for this IE code.
I'll tell you what is IE code. IE code is import-export code. That typically the code is taken when you are importing or exporting services. So when you import materials like your laptop, servers, or any your softwares, you may have to pay. It has to cross through the customs and come. So customs also track all those materials who are coming inside. So you have to register this with the IE code authority that is there. Every city is got. You have to register yourself. So they give a number to you. So that number you should mention when you import. Similarly, when you export your services, you are raising a bill of $1,000 to X, and you are intimating your bank that this money is coming, your accountant. He wants to track through you as to how much is coming. So it's basically a tracking mechanism which tracks based on the code that is given to you how much you are imported, how much you are exported, what is your net earnings. This the government wants to see. So that is why an IE code is being asked for.
It is compulsory.
It is compulsory.
Without that ban,
Without that, you cannot import.
they actually allowed us. But
See, in India, money, dollars coming in, nobody asks questions. Dollars going out, everybody asks questions. So when dollar is coming inside, RBI is also not bothered. Even when this guy, RBI is bothered when I said earlier on the shares issued to foreign guys, RBI is bothered only whether he is paying appropriate to the value. But RBI is not bothered if he is paying more than the value. Similarly, when you are raising an invoice and bringing the money inside, banks are generally lenient. There's a requirement to give you the IE code, but they don't. If you say no, they're fine. But when you're importing, the customs guys will not allow the machinery inside unless you give the IE code. It has to lie in the dock, getting rusted. So IE code is a must that you should take if you are having import-export transactions. That is within 20 days you'll get it. You make an application. 15-20 days is normal time.
the volume of the rate is 2,000.
That varies.
all registrations, cost is very low.
Problem is price.
India has got a lot of red tapeism, so you file something, it keeps going on, and especially this part of the country is even more. Both things.
Service tax applicable in foreign countries also.
See, service tax is when you are raising an invoice to an overseas customer, there's an exemption still, it's valid, right?
If it is a service received from a foreign entity, you as a recipient have to pay service tax.
So for import services.
If it is an export of service, you get a refund of all the input services as well. Your services are also exempted.
So you don't have to raise a charge service tax on your export invoices. There's an exemption specifically provided. Basically, you're earning dollars. The government gives. See, government has got incentive schemes for all these dollar earning. I'll take you to this. Some more schemes are there. Earlier they had, we are earning foreign exchange, no income taxes payable, STPS scheme. When you're earning foreign exchange, no taxes are payable, SEC scheme. Service tax is not chargeable on your invoices raised to customers. So we are a dollar crunching state. We actually earn dollars to pay for all our oil and other things. So the government gives a lot of incentives for dollar earning machinery. So that's one of the machineries. Service tax is not applicable. Income tax is not applicable for certain types of businesses. So that will take it. Okay, the compliances, as I was saying, there are 50 odd returns to be filed by the corporate. But technically, these are some of the dates that you should be conscious of. Like remittance of service tax every month, 6th is the due date for that. Payment of the withholding tax, the time number which I mentioned earlier, every month, 7th is the due date for that. Payment of PF if you are liable for that, 15th is the due date for that. Okay, here's I didn't tell you, the contractors somebody was mentioning. See, when you engage contractors, the payment that you make to the contractors is subject to withholding. That is one aspect of it. Secondly, you should ensure if you are engaging more than 20 contractors, like security people, cleaning people, or employees on contract also, you have to ensure that the contractor pays ESI for them. And the employee state insurance, everybody earning a salary up to 6,500 are covered in that. So you need to pay a contribution of 8.33%, I think, to the ESI authorities, which gives benefits in the form of hospitalization and all that. So
Freelancers also come under that.
if he's a contractor, if he's engaged as a contractor. So you don't engage him, you engage the freelancer as a contractor, you engage him as a professional or something, like a consultant. Consultant don't fall under this, I'm telling pure contractors. So if you're engaging more than 20 contractors, you have to ensure that he does it compliance. If he's not doing it, you have to do it. So if you don't ensure he's doing it, the liability is on you, not on him, because you are using the contractor. So you have to ensure that the ESI payment is done properly. That is where the payment for ESI is to be done every 21st.
How do you differentiate between contractor and the consultant?
See, a contractor is like a guy who does a contract of work, like a canteen contractor, a cab contractor, or a consultant is a guy who does professional services, doctors, lawyers. Of course, we also call our consultants, child accountants.
Where does interns come in this category? Interns.
Interns are considered students, no?
So they are not employed, they are not contractors.
They are students
So
basically.
we don't need to pay anything.
If you are categorized as interns, then you are getting some stipend. You'll be getting stipend, not you will not get
We are
salary.
giving stipend.
You are giving stipend. So you are giving. They are considered students. Students don't fall into this category.
So no tax on that.
Stipend is not taxable.
Even the is not applicable.
No.
Yeah. Stipend normally is normal amount, right?
Oh.
It's not a huge. You can't pay 3 lakh rupees per month of stipend.
No.
So there's a basic exemption also. 1.8 lakhs. There's no tax, income tax. So that will be below that only. Yeah. Moving on. Yeah. There's supposed to be yeah. There's supposed to be advance income tax. See, when the income tax liability that is there every year, you are supposed to pay advance income tax every quarter, starting from September quarter. September 15th is the first installment. Then we have December 15th, then March 15th. You are supposed to pay the advance tax in equal installments, so that there is no burden on you to pay the taxes at the end of the year. That's those details are important. Otherwise, interest and penalties are applicable on that. Then we have wealth tax return to be filed in case you have unused land which you are not using for your business, or you have vehicles more than 30 lakhs in your farm. You are supposed to pay wealth tax and get 1% of the value of the vehicle or value of the unused land. That due date is 30th September. Filing of service tax half-yearly and half-yearly return is by 21st of October. Filing of service tax half-yearly 31st of March, 21st of April. So 2 half-yearly returns for service tax next year filed. And a consolidated annual contribution statement to the PF authorities are supposed to file an annual statement. It is on 30th. Yeah. Okay, just go back. So these are some of the dates. Okay, we have not covered a couple of dates also. Filing our annual income tax return, which is 30th of September. So for a normal company, you will have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, about 20 dates. In this, some of dates are not added also. 20 dates are there for you to take action to file activity reports. So that is something which is there, which is required to be compared with any entity that you form up. Yeah. Okay, so far we saw on the compliance side what kind of laws are there, investments, equity, form of entity. We'll briefly, very quickly take you through, sorry, quite later, take you through the direct tax, how the direct tax scheme is there, how it works. See, direct tax is under 5 categories. Income from salary, where you are, when an employee earns salary, he has to pay taxes withheld by the company and he has to file a return. Income from business, where you are be generating income from business and you need to pay corporate tax and file a return for that purpose. Capital gains, when you sell capital assets, like your shares, your fixed assets, land, when you sell capital assets, a capital gain comes. So there's a tax on capital gains. Income from other sources, those which is not falling under these categories. Okay, before that, income from house property. If you have a house that you let out, a building that you let out, rental income that you get, that gets covered under income from house property. These are the 4 main categories. The income which is not falling under any of these main categories falls under income from other sources. Typically, dividend income, interest income, directors' fees. So all these categories come, which is not falling under any of these categories, comes under income from other sources. The tax rates are slightly different for each of them. Income from salary, yeah, the next slide. Yeah, income from for the individuals, the maximum slab rate is 30.9%. 30% is the base rate, 0.9% is the surcharge, sales education, so they have a long list of sub-taxes, all put together the 30.9%. For a firm, it's again the same rate. For a company, it is the same rate. For a local authority, there are different, apart from these 3 main categories that we discussed, there are local authority, association of persons, trusts, or artificial persons. There are some artificial persons also where you will be filing return on behalf of somebody else. So for those people, slab rates I mentioned, I think broadly the rate is more or less the same, the maximum rate is. So yeah, I can move on.
What is the here?
Into undivided family. Undivided family. So where we have a family See, as an individual, you are there. You have a wife, you have a kid, you are a small HUF.